Everyone on the Tickety Talk, I'm pretty sure you can hear and see me by now. Please let me know if you can or cannot hear and see me. I'd also like the Zoom users and participants to say something over in the Zoom to make sure that we've got audio from them as well.
Doing good.
Mike. All right. So, anybody on TikTok, can you hear the Zoom users, please? All right, cool. All right. I'll check it. Welcome aboard, everyone. Just making sure we've got good sound. Papa Dot says you can hear me. Can a couple of people in Zoom open up and let's get some audio over there for them? How about that, Papa Dot? Can you hear them? Or Pappy D? All right, cool. Thank you very much for the response over there on TikTok. Very, very good. All right, well, welcome aboard to ADT's public broadcast of futures. My name is Doug. I'm one of the training moderators here with ADT in the futures group specifically. I focus mainly on futures and futures trading in education. So, quick legal, none of us here at ADT are licensed financial, tax, or investment advisors, so everything that we do here is for educational purposes only. Any kind of trading examples that I may do live with you today are only for educational purposes only. Please do not copy trade me or imitate my trades in any way, because you are going to be on a delay. TikTok about 10 to 15 seconds, YouTube about 30. So everything that you're going to be watching is going to be delayed to you, so please do not try to copy trade. Outside of that, let's get your questions going over on the YouTubes and TikToks. If you could please tap those screens, and hashtag FYP in the chat is always very helpful. And like, share, and follow on all the feeds, please. Share us out to your socials, and that would be very appreciative. All right. So today we've had a very, very down day in the indices. Each of the indices have been riding a very, very long 2-minute EWO to the downside, and we've got a couple of people that have been riding this thing for hours now. So very, very lucrative day in the indices to the downside. Oil had a quick pop and then ranged for most of the day. We got a couple of clean moves, both once to the upside and then now to the downside, where we're currently sitting on support at 62.82. So we'll see what happens the rest of the afternoon as volume starts to taper off even more. Gold and silver hit 4-hour key levels that I was watching and calling out for the group, and are now pulling back. On gold specifically, I was looking for 49.01 as a potential bounce zone for recovery, and it's been flirting around this area for quite some time. But we'll see how low this thing will go. On silver, we're sitting on a multi bottom here, which would be a good level of support at 82.80, but $80 most likely going to be the best level of support there for psychological purposes. Let's see here. No question yet over on the YouTubes or the TikToks. Let me know if you've got any questions. All right, what were we just talking about? Let's go to the 4-hour on gold. And this was the key level that I was watching earlier. It was right in through here. And a level there. Here. There. And then I started working my way down through the rest of the price action with a stop in the middle here. So the largest key levels that I was watching were the 5,025 due to the move here and the support bounce from the last move up. So I was watching that one very specifically. The other thing that I was also considering is that the overall move from our last high to our last low, we were sitting right here on the mean, as you can see with the with this particular channel box that I use, and that's right squarely on support. So again, that being 49.55, right in that range I was expecting. If it cannot break and hold above that, then we were likely going to see a pull, and that pull would then manifest itself in one of these levels before it found its real support. So what we're looking for now, we can go down to the lower time frame, but I'm looking at 49.01. I believe I said I had snapped, which was right here off of these highs. So yeah, 49.80 or 48.99. So basically 4,900 by the time you settle everything out. Yeah, there's the 49.01 I had. So breaking that down to the 2 minute, now what does that look like? Well, here's our major points of rejection, right? So at the very top, if you were watching that key level, you could have expected a drop right out of the sky here, and we had our first support way down here in the middle of all of this chop and consolidation. Now, the return trip did not grant us more than 50% of the overall move for recovery. So because it could not break and hold above this, there's our next rejection. It came up, retested that same area, and then pulled again and rinse and repeat. So here's our last high, here's our last low. If it can't break and hold the mean, what's it going to do? Pull again. Everywhere through the stage of the move, you could do the same thing. So if you understand your key levels and what to expect from price action as it moves up and down, then you can actually plan your entries with cleaner stop placement and less risk out on the table each time. Good afternoon, everyone over on TikTok. Good afternoon, everyone over on the YouTubes. Tyler over on YouTube says, "Hi, Doug. I'd like to start paper trading with what my real account would be someday. What level of futures could I trade with, say, $500 to $1,000 to start with? I can't ever seem to find them on Webull or TradingView." That's a good question. Now, when you're trading futures in Webull's practice account, there it is right there, almost to the tick. Tex, did you see that? Oh, man. I love this job. All right. So if you're paper trading in Webull or in TradingView, they're going to use the initial margin rate. So you really can't set your account size to what your real account size would be because it's going to use the initial margin rates for the industry standards. Now in Webull, what that would look like. Okay, so if you want first of all, if you were going to start practice trading, you want to start practice trading with micros. So understand what the micros margin rates are. So here in ES, you've got a margin rate of $124.96. So Tyler, if you're using Webull to practice trade in their paper trading, what you're going to want to do is scale your difference between the initial margin rate and what you would normally be able to trade. So intraday, you could trade, up to I wouldn't do any more than 5 contracts on something that small. 1 to 2 would be the preferable on an account that size. So 1 to 2 micros, all you do is you scale your paper account to whatever that value is in the initial margin. So if you wanted your paper account to be more realistic, then you could set up a paper account for anywhere between 5 and 10,000 rather than the 5 and 1,000 or 500 and 1,000. So just 10x it basically, and that should get you in the ballpark of how many contracts you'd be able to trade in realistic terms. But that being said, it's really not that important that whatever your starting value is, as long as you're sticking to mathematically what you would be able to trade with that size account. So again, 1 to 2 micros at a time is all you're going to want to be able to trade with initially. Then as you build your account, whether it be in paper or cash, then you can start to scale up. But you want to keep your risk relatively low. And if you follow Coach's rules, it's 1 to 3% of your account in any given trading day. So using ES or MES as an example, it's $1.25 per tick. So on a $1,000 account, you have a $30 maximum loss in that day. So how many ticks do you have to be upside down to trade to hit your maximum stop loss or maximum 3% for the day? It's not that many, right? It's less than 9. I can tell you that right now, because it's $1.25 per tick. Oops. 24 ticks, right? So 24 ticks is the maximum stop loss or loss that you can take on MES in a day. So what does that look like in NQ? Well, in NQ, it's 50 cents per tick. MNQ is 50 cents per tick. So same thing, it's the same $30, but now you have a more highly volatile ticker that would cost you quite a bit of money if you got upside down on that one. Case in point, the average true range of a candle is 106 ticks right now on the 2-minute. So it would only take one or partially one candle for you to hit your maximum loss for the day. One candle. And that could happen on the 30-second, in 1 minute, 2 minute, it doesn't matter. On the 1 minute, it's a 74 tick. So that right there is over $35 if you had a 74 tick stop loss and it got triggered. So it all depends on, with your size of account, it all depends on the volatility of the ticker that you're going to be trading and what that looks like as far as setting stop losses so that you have an appropriately sized risk budget for the ticker that you're trading. So again, case in point, MES and MNQ would not be ones I would start with. M2K would definitely be one that I would start with. Again, it's 50 cents per tick, but your average true range on the 1 minute right now is 23 or 24. It just changed to. So that's a $12 loss if you had your stop loss at 24 ticks and it got triggered. So you're well within your risk budget for the day to be able to take yet another trade if you were wrong on that one and you wanted to take a break and so on and so forth. Then you step back, reassess, reevaluate, and look for a better entry. You find your better entry, you take that trade, and now you have a trade that's working in your favor. So risk budget is going to be the biggest thing for tiny accounts. You definitely want to stay away from the more highly volatile tickers like gold. Silver is an absolute no-no on your size of account for many reasons. One, the micro is $500 per contract in Tradeovate, and in Webull, I think the micro in silver is, it's almost $2,000. So the lesser expensive tickers that if you're going to be using Webull are going to be the currencies. M2K is $73 on the intraday and $1,000, $1,046 on the overnight. Which again brings me to another point to make, is that in Tradeovate, your contract cost for both the overnight and the intraday is $50 per contract. So I would actually recommend for tiny accounts, because you have the reduced margin rate. Yes, the fees are a little bit more expensive unless you do a monthly or a lifetime membership with them. But with the free membership, the fees are a little bit more expensive than they are in Webull. And that's about it. I mean, if you're only in for one or two trades and you're looking for those really nice EWOs, or you get in on these really nice bounces like this that you can ride them up and take some profitability, those are excellent entries on off of support that you could do with one or two micros, and it would only cost you $100 in margin for 2 micros. Yeah, there you go, Tyler. Good. So I have the lifetime membership with it. So my fees per trade are $1.30 on indice micros. If I were trading silver, it's $2.60, which I trade. I practice trade quite a bit. So if you've got your Tradeovate account going, good for you. That's going to be a good decision to make for smaller accounts. The other thing I really like about it is that you can log right into your demo account, the practice side of your account. You can log into that in TradingView and then use Coach's indicators along with TradingView and your Tradeovate account in practice trade with actual live mechanics and live data. Do I trade options? No, I don't. I prefer futures. Say what you mean. No, I don't. I don't trade stocks either. Just futures. Okay. Thank you for that. Yeah, good question. Let's see. Stick to the rules is the key. Building habits that preserve your capital. Yes, sir, Jerry. You are 100% correct. All right. Any more questions? Keep them coming. All right. So we were watching gold there pretty heavily today. Tex, did you get in on the recheck of the 9? Really nice move up off of VWAP. Make sure we're clicking our screens over there on the TikTok, please. Right. Welcome, Tyler. Yeah, so the thing that I like about futures is one, with options, you don't have to do a lot of the math that come along with options. Options are extremely lucrative vehicle to use for trading. I will be trading them eventually. I'm just not right now. I prefer the simplicity of the futures trading. You can trade with your stop 23 hours of the day. Whereas in stocks, options, you can't. Options are only available certain times of the day, whereas futures is 23 hours of the day, and you get your stops. And there's usually volume in one of the markets, whether it be metals, energy, or the indices, right? And in some times of the day, there's lots of volume in all of them. So I prefer it to stocks and options trading. For me, it was easier to get into as well because it didn't require as much capital. If you were going to do options, you would have to have at least 25K in a margin account, and then you're subject to PDT rules, which you don't have in futures. You don't have anything like that. We have instant cash settlement, so you don't have to wait for your funds to settle out for the next day, right? Which it used to be 3 days, and now they've gotten it down to one. The new rules coming out that potentially could change the market a little bit for me is if they reduce the margin rate requirement down to 2,000, that I think will bring a lot more people into the market for options trading that have smaller accounts that couldn't amass a 25K account and hold it, so on and so forth. So the thing that's the other thing that I like about futures is the access to brokers, and if you're a prop trader, prop firms, there's a ton of options out there for those kinds of opportunities. And with the proper training, someone could take a relatively small investment in a prop firm or a low margin broker like Tradeovate and do some pretty impressive things. So once you've got the training and you understand how to get in and out of a trade, for the mechanics, proper position sizing, and risk management, you can do a lot of cool things with small accounts. I'll make sure. Oh, you're very welcome, Marcy. I appreciate you stopping by. Please make sure you hit that like, follow, and get those hearts going. Always appreciate your support. Yeah, Jerry, I don't know about that. I haven't. This is actually my first tax year going through that ordeal, so I'll be having lots of conversations with my tax attorney. Okay. Just a quick reminder that ADT has partnered up with. Yeah, that's what somebody just said over on futures on YouTube, Forrest. That's I like that too. The taxes being easier and more advantageous in futures than they are in options trading. Yeah, yeah, for sure. So anywho, ADT has partnered up with Tradeify, which is a prop firm that you can trade through Tradeovate and then link to Trading Views. So you can do, not only do you get the best discount you can with using the code ADT for your Tradeify account, depending on the type of account you actually go for, you can go all the way to the Lightning accounts, which are a little bit more pricey, so you get a heavier discount on that. But they are straight to funded. So if you have the proper training and you know how to manage risk, you link that right into Tradeovate, and then you can do that same. You can do all that prop trading right in Trading View using Coach's indicators that you get with your futures membership. So, the best of all the worlds as far as I'm concerned. Because if you do have a live cash account also in Tradeovate, then it's all the same mechanics. No matter what it is that you're trading, in your prop, in your cash, doesn't matter. Very versatile system. Yeah, that's very very accurate. So again, legal. None of us here at American Dream Trading are licensed financial, tax, or investment advisors. Speaking of the tax discussion. Yeah, and you don't have the wash sale rule. That's right. That's a big one. All right. Also, if you do have an interest in joining American Dream Trading, there are several different options. We've got monthly, quarterly, annually, and we still do have the Diamond Lifetime. And if you use my name, DOUG Doug, as the discount code, you will get 10% off of your first payment. Now, if you use that on the Diamond Lifetime membership, you get $500 off the top. And no more recurring payments, and access to all current memberships and future memberships that Coach creates. It really is the best value, roughly about $50,000 in current membership and other advantages and value in that membership for $5,000. So if that's something you're interested in, let us know. All right, so here we go. Gold coming back off of the double top here, pulling back to support off of the 21. Got an initial bounce, but not enough to get us to break this high. And now we come back one more time, pick up some more strength, and make another run at it. Now we are at the top of the trend channel. Now what does that mean? And we have the 200 right here. That means we have a lot of resistive pressure up here. We are still at the double top. We haven't broken and held that yet. And we continue to see resistance here as we get poor starts to the candle to the upside. So this is going to be a dogfight in here. Try and break and hold above the 200. Now, once the 200 has been broken and held above, the next major level to really work through is 4977.7 to the upside. Jerry, I would love to be able to do one-on-ones, but currently David and Coach are sound like a pirate. They are the training. They are the training masters right now. So, and David's wonderful. Honestly, if you have an opportunity to hang out with David, he'll blow your mind, and then Coach will just melt it. I have done private trainings and the permission with from Coach and from Bruno from time to time. But our actual training moderators are David and Coach when he has the space. Thanks for the question, though. Appreciate you. Yeah, so here we are, just kind of bumping our gums up around this level up here. And 49.50. Now, how did I see that so quickly? Well, it's actually more of a range than it is anything. So if I'm really looking at this for reals, I'm looking at this area right here to break and hold above. And that range is 49.47.6 to 49.50.2. Why do I pick that area? Well, this was our last response move to the upside, which left this buyer's wick behind. And I like to use these areas in current price action to tell me what's been happening, so that when it comes and revisits these areas, I kind of half expect some level of resistance. And you can see that as it was coming up to this spot, I'll turn Coach's indicators off real quick so you can see everything here. But as it was coming up to this spot, from this wick high to this wick low, essentially is going to be the challenge area that we need to break and hold above, and then ultimately that wick top. So this entire range in here is going to be challenging. Now, why is it so hard for this to break and hold above this? Well, when you turn coach's indicators back on, it shows you very clearly why. We're at the top of the trend channel. The trend is currently down, so this is now a counter trend. It's fighting the trend that has already been going on for some time. So the work is going to be difficult when you get to certain levels, right? And those levels are going to be double top areas that have prior support, because that creates a very strong level all the way through there that we have to break and hold above. And if we can't do that, then the upward momentum has been squashed, and we should be looking for a pull back to support, which would then be down here off of these highs, where I have a key level at 4933.7. So this is a very key area up here as to what it's going to do. Definitely no entry criteria up here. This is a watch and wait. Okay. Because all too often, I mean, if you're in for a couple of quick ticks, which I don't recommend in micros, if you're going to be trading micros, you really should be looking for the longer play. 2-minute EWO would be preferable, or phenomenal entries on support bounces like these that allow you to capture some room and get some running for those tick counts. You know, this one from the last time, talking about this, if you got in on this confirmation candle here all the way to the top, that's 448 ticks. Well, in micro gold at $1 per tick, that's $448 per contract. So imagine that you get in with a couple of contracts and you get these nice volume candle moves up, you protect your trade right away, and you get up to double tops, or you start to see some trouble happening. You can start to manage this now like an EWO. You've gotten so far away from your buy position that you can now manage these kinds of consolidation moves a little bit more easily, because your entry was way down here in a place of strength, right? Rather than entering up here after the break and hold of the middle of the trend channel, rather than your position being here. Now you're dealing with the proximity of all of this resistance. So for me in micros, I try to focus on where's my good structural support areas. And that gives me a nice strong entry, so that when I do catch these runs, I can capture some really nice profitability out of a micro. And again, from the entry point down here to its top was about $450 per micro. So where would my shed points be? Well, it's not here. That's consolidation. It's not here. That's consolidation. This happened too quickly to actually react to, but it did close above the 9. So my first shed point is right here. And now I have a runner that, as long as the momentum is carrying to the upside, I have that last contract that I can just let run and do whatever it wants. Now, if it comes down and breaks and holds below the 21, then I should probably take it there, because that means that the trend is now, at least the momentum is now failing to the upside, and I can be looking at a deeper pull, and I don't want to give up that kind of profitability. So there's a lot of different exit criteria that you could use. You can also use the notion that as long as it doesn't break and hold below the 55, I'm good. Now, if VWAP was traveling up here, okay, and VWAP travels with price action, if your entry point is down here, your stop is to protect fees. And the real notion is that as long as it doesn't break and hold below VWAP, you're still in it. Coach has several videos on the EWO system that lay that out very specifically, and that's for your runner. So once you've captured on some pullbacks and you've captured some profitability, your last 10% or your runner, whatever that looks like in size, as long as the trade doesn't break and hold below VWAP, then you're still in the trade, because if the trade's moving up, then so is VWAP. That's the idea. Any questions about that? Okie dokie. What is the 2-minute EWO? Well, that is one of Coach's main strategies for entry criteria. It is for entry only. The rest of the management is learned through the strategy itself. So the entry criteria on a 2-minute EWO specifically happens on a 2-minute timeline chart. It doesn't matter what it is. It could be crypto, it could be futures, it could be stocks. It just doesn't matter. It works in every market. It also works in every time frame, but we train on the 2-minute. So entry criteria, let me make this a little bit bigger down here. When we're looking at the entry criteria for a 2-minute EWO, this particular one that's running right now is what we would call a counter trend, Chad. So the entry, unfortunately, is on the second bar as long as it's larger than the first. If you get a bunch of flat bars, okay, like we have over here, okay, there's no entry to a trade because that means that price action is just going sideways. It's not making any higher highs, lower lows. It hasn't picked a direction. Okay. Now, the entry to the current EWO is very, very high and very close to resistance. So this would be, again, a no entry EWO. The only reason being is that you've got a lot of resistance up here. So what you'd really want to do is wait for it to clear said resistance, okay, which is really a break and hold of this key level here, which I believe is previous day high. But the notion of the EWO is for entry criteria specifically. So let's go find the actual EWO, and I'll pick on the indices because these things are doing phenomenal today on the downside. Okay, so here is a perfect entry EWO. Let's see, we're on the 2-minute. That would be the bar second prior or larger than the prior. So down here in the bottom, this is the EWO. I've got 2 candles of relative same size. So that tells me that we're not quite there yet. Okay. The next bar is larger than the previous bar. But again, if you look at where this is on the chart, we're squarely up against the 200. We are below VWAP, but we are against the 200. So in the EWO process, we train to recognize, is this a good entry point yet? The answer is no. The real entry is here off of this candle as it breaks the 200, comes back, retests. This right here is your entry point. So as you're watching this happen, you want to see a nice volume candle to the downside. That's your hold candle. It didn't happen. So we took the breathe back to the 200, checked in on the 9, and then finally got our shoulder on shoulder and our move down. That right here was your entry. Once you've entered, then you manage with the EWO process. So here's our entry on this candle. The rest of the time, you're watching for price action. And as long as it's respecting the 9, which is this white line here, however many contracts you get in with, say it's 6, okay? You get in with 6, you're holding your contracts all the way through this, okay? Just because it's checking in on the 9 doesn't mean that it's actually pulling back. This is consolidation. This is consolidation. This is consolidation, right? We never really had a pullback until all the way here, where we checked in on the 21. So that would have been a 50% shed. So at 6 contracts, you would be shedding 3. Okay. Our next pullback when we broke and held the 9 is right here. Shed 1 more. Next one was right here. Shed 1 more. and now you've got one running. Okay. So again, the theory is my buy point is way up here. So here's my buy, here's my entry. Okay. And my stop can be to protect my fees. I trade for fees, which is only a few ticks, and look at where VWAP is. So this could continue to fall down or continue to move down. And as long as it's below VWAP, then we're still in the trade. Again, the notion for that is to allow it to capture as much profitability as possible in the longer runs, but your exit is completely up to you. So some of the things that I look for on smaller time frames, if I'm not trading in a swing trade scenario, is where are my major key levels? Well, my major key level is right here. If I could draw that straight line, I'll do it this way. So my major key level is going to be right here. Well, why is that? I've got a support bounce here and a rejection here. So this line in general is going to act like support and resistance. A pretty good solid line there. We also had it check in one more time here and here. And now we're coming back up to the bottom side of that range right there where we're finding most of our resistance. So if it cannot break and hold above these ranges, this is not going to come back up here. It will turn right back around and continue down. So can you stand those kinds of pullbacks on your runner, right? That's really the question. Because if you can do that and you can understand through the math of how this works, as long as it's not breaking and holding above 50% of the move from top to bottom to the upside, then the trend hasn't changed. All it's done is come up here, checked in on a major key level, and then pulled right back off of it. Actually, Roman thread, it's neither. This is futures. So we're just futures contracts. Was there a double bottom on SPY? Check it out. Yeah, absolutely. I did have some key levels snapped in here from a while ago. Yes. Got a double bottom here at 684.84. It broke that, but couldn't hold it. So I'd be willing to bet that you've got something 684 flat. 684 flat would be just a good psychological level. Yeah, you see here. And again, chart's a chart. When you have a rejection in a clear support bounce that has not come back and revisited this area in very, very long time, these are your stronger levels. These are the ones you want to watch for, especially on the higher time frame. But yeah, that's a pretty good bounce. Now, I want to show you this. Yeah, so I want to show you this, Ronald. Check this out. Okay, from your last low or your last high. Okay, last high, not the higher one before that. Your last move, where it created a high and then moved down. Here's the mean of that move, right? And we broke it right here. You have support. Right here, you have resistance. Okay. And then you've got your double top right here. So there's a ton of pressure right here that if you understand how this works, then you can plan not only the support bounce ride that up, but you also have valid targets that could be areas of collection for shedding or just getting full out of the trade, right? Because these are massive points of resistance on the move up here. This double top, this is a double top pullback. Now, here's something else that you need to understand. And if you don't understand patterns, I would highly suggest that you start looking into them. This is your double top here. Here's your test of the double top. This is your cup. This is your handle. This is a major level of support. If it breaks and holds below this, the pattern bounce to the upside to recheck in on these levels is now gone, and you should look for support further down. Well, where are you going to find said support? It's going to be right off of this 684.84 again, because that's where these bodies are resting before it gets all the way down to 684 flat. Does that make sense? So my first level of support I'd be looking for would be right here. And if I just snap the line, there it is. Okay, so now we're going to be trapped between what could be pattern support levels, okay, and the mean of the overall move to the downside. And you could just see this. And then finally pick a direction one way or the other. But the current trend is down. Okay, so you can then take the tack that, all right, well, I can see an obvious trend here. And I'll take it from my highs, right? And there you go. Turn everything else off. And even if you didn't have access to Coach's indicators, you could still do this, right? Now, if this actually does find support down here, well, now I have a scenario where I have my low and I have a higher low that creates the wedge. And that, if you watch very closely, will be where it will range, get super tight, and then either break out or break down. Okay. So this candle move now has to break and hold above all of this resistive area here, which is where all of this is resting. Okay. In order to move back up, get back up here to the top of the trend. And if it can't do that, well, there's your low, or there's your high, there's your low. And oddly enough, there's your 50% line. So if it can't break and hold that, what is it going to do? Pull. Exactly. You are correct. This is a key level for this one to break, right? As evidenced by this shelf right here. Retro, are you good to know which part? I'm guessing it's the, yeah, okay. Yeah. All right. Cool. So here we are getting hung up here, right? Oh, you're very welcome, Ronald. This is a 2-minute chart. Matter of fact, we could watch ES do the same thing, essentially. My L2 on here so you can watch levels. Let's take a look at ES. Okay, so there's ES. So there's the futures version of your stock ETF doing the same thing. Oops, startled me. All right, so there you have it. There's that same shelf. Okay, and there's our support bounce. So now, if this continues to move up and we start challenging this high, the first thing that I'm going to do, let me set this one up like we were watching it. There's my downtrend. Okay. Here's my level of support. So I've already got a wedge here, or a flag, I would say. So this could sit here and bounce off of this level. It could come up and we could channel trade it up and down until it finally squeezes itself to a point where we actually get a response. Okay. Now, let's put Coach's indicators back on and see where our indicators are resting. You can see right here, the 55 is following right along that trend, right? You got the top of the trend channel. You got the 21, which is kind of flat right now, right? This little purple one, not really doing much of anything. The 9 is the most reactive because it's only 9 candles worth of information there. So it's going to be the one that has the most movement. But as we zip this out, now I have a low and a higher low. Good. Now I've got 3 body touches, 1, 2, and the one that closed. This gives me an even more defined area to watch for that that breakout, as it were. What chart is best for micros, in my opinion? You mean what ticker? Or what platform to chart in? Retro. Oh, what ticker? It depends, you know, on what kind of trader you are, really. If you're an EWOer, I'd stick with M2K, MYM. You can see that they had massive EWOs today. ES and NQ, record days on those too for the EWO. Normally we see more volatility in those two, but I tell you what, they did some pretty impressive stuff today. I mean, look at NQ. Thing has just been down all day long. ES the same. So, but yeah, M2K and MYM are good ones. Micro oil, microcurrencies, because they're relatively inexpensive and they do tend to do well with structure bounces and rejections. So relatively easy to trade. And Ralph is our currency guru. He's got it on lockdown. But I would stay away from the metals, particularly right now on a small account. Volatility on gold and silver lately is very, very high, and eclipses actually NASDAQ volatility, which is our most volatile indice that we watch. So which time frame do I watch? 1 minute, 2 minute for trading. If I'm in an EWO, I might move up to the 5 minute. But I do have, I typically do have a multi-time frame chart open on another screen. So I can see where the indicators are resting at the 5 minute, the 15 minute, the 1 hour, and the 4 hour. The 4 hour is the one I was doing most of my evaluation on, based on where it was, where it had started and where I saw it this morning. I was predicting that we were going to get a pullback because it was starting to pattern out. And what I mean by that is it was coming up into an area of consolidation right here that I figured it was going to be relatively rough for this to just blast through. We've had 2 really solid days in a row, or 8 hours in a row of solid buying. I knew, I had a feeling, I didn't know, but I had a feeling that that was going to start to taper off. So I had snapped a couple of levels and had been watching others very closely, where, actually forgot this one, where I did actually hit the mark, several of them. Made it a very good day. You bought a bigger monitor for that reason, so you get more stuff on it. Perfect. Yeah. So the thing I like about TradingView when you do these multi charts is if you hold down the Alt button and you click in a space, come on, it'll give you the maximum size chart, so you can go through and do some different level checks and whatnot. When you're done with it, just Alt click on the chart again, and it puts you right back into the multi chart. All right, so here we are back on MES, and we've got our breakout. Now, is this a break and hold? Not yet. What's our impediment to the move up?
Double top.
The same place we rejected before. So in kind of a roundabout way, this was a really messy up handle to support push. It actually ended up doing it, but it took some time. And this would be the key level that I would be looking for the start of support. Down here at the body rested, where the bodies are resting here, would be my last bastion of hope, which would have been where this was coming, the center of the trend channel. So it did actually pattern out. And we're now up here checking in on this level. And if we can break and hold this, then that would be a nice, that would be the trend change. Now we're to the upside. Netflix is drowning. Most of the stocks that the higher ones that we watch quite a bit, they're all red. Applied Digital is the only one that's green for today. That's on my list. Everything else is red. Yeah. And that's to be expected, right? When you look at NASDAQ, just looking at NASDAQ and how much it's fallen today, if you look at the, because it's so tech heavy, if you look at the MAG 7, there you go. So the top 7, or the largest 7 tickers that are housed within the NASDAQ itself, bleeding out all day long, there's the result. Right? You're going to have, when they're all going in the same direction, it's hard for NASDAQ to fight that. Now, S&P 500's got more weight in it and is more diversification, but you can see that these guys pretty much have taken the market down with them today. Like I said, most of the tickers that I watch over here, the entire market's down today. Crypto is spotty, but mostly down. Ag is up. Currencies are up, which means the dollar is weak. The dollar index is weak today. I think we're trying to bounce back, but indices are down, which is directly related to the stocks. Metals are actually up from where they were. Silver bottomed out at about $72 on its move down. So this move back up, here's the $72 mark where we bounced out of this. This move back up, we still have not reclaimed from our last high anywhere near 50%. We got close, but we're still not trending back up to the upside. Even though today was in its range, was about, I think topped out, it looks like $89. So $19 range today. That's pretty impressive. And expected to reclaim it all in the same day. We have entered power hour. Yeah. And there's that pull on gold that I was talking about. Okay. Wondering why that wasn't working out. Go. So there you go. There's a perfect rejection right off the top of the trend channel and this double top that we knew we were going to struggle with on the way up. So if you play double tops like Coach trains us, you are making a ton of money right now. Let's see what else is going on. Silver's on support. The euro is also on support at $1.18, 330. Natural gas is broken its double top and rechecking that same level at $3.33. Indices are trying to make their move up. Okay, so here we are, top of the trend channel, like I was talking about with ES. We've got this multiple top here, triple top. Rejection, but not much of a rejection, right? So we're still staying relatively tall. We've come down and checked in on the 9. We are back in our wedge range. So we could come all the way down to, let's see here at 69.05 if it needed to pull and then find more support. But as long as it stays above this trend line, we are in good shape. And let me know if you have any questions over on TikTok or YouTube or anywhere else. All right, so let's start looking at our L2. We're on MES. All right, bit of a fist fight. We don't have a lot of really anybody taking over here. We've got 69.13 as one level of goal, 69.13. So as long as it comes up here to the top and either those contracts get moved or bought out, we'll get that pop. There we go. 69.14 now. 69.15 on the books now. 104 contracts at 69.15. 69.15 gets us up to where this body is right here. Okay, so you can start to see how these levels are coinciding with limit orders that are over here in the L2. 69.15 is the goal to get up to the base of this. That's the bottom or where this candle started. So if we can get up there and we can sell those contracts off, the idea is that when it gets to 69.15 and they sell off, you'll get the next pop to the upside. Hi, Tony Lynn. Thanks for stopping by. Let me know if you have any questions. And we're just really struggling with this up here. Real quick, while we're watching this, ADT and Tradeify have teamed up, and you can use code ADT on any Tradeify accounts if you're interested in prop trading, I should say. Use code ADT and you'll get the best discount possible at the time. For those of you that are out there looking that like those. Yeah, Mark. Silver dropped. Bottomed out at $72. Or thereabout. Mm-mm-mm-mm. 69.15 showing up again. If we can get 69.15 to the top of the L2 over here on the right hand side, then we should see that little pop. Come on. Here we go. 9.17 now I saw in here, 17 and a half. 17 and a half gets us up to here. So past this double top right up through here. Almost to the 4-hour high. Thank you, Mark. At the crackhead shakes from not trading all for a couple of days. Ron, yes. I'm sorry. Did I miss it? Chart right now. Yes, this chart is on the 2-minute right now. Yep. Let me know if that wasn't the question, though, please. Yeah, he is. One of our own members knows how hard this has been for you, Mark. I don't know why it's not showing. Hold on. It doesn't, yeah, that doesn't make any sense as to why it wouldn't. Can you do me a favor and retype it? Um, Bear in mind that the algorithm is getting very, very strict with wording. So if it deems a word in there suspect, it won't post it. Not to say that you would, say anything, adverse or anything like that, but. Okay, couldn't hold it up here, so we're pulling back down to support. Let's see if we got anything else that's moving here. Oh, NG's really nice move off of support down here. Had a nice little pullback. Another place that you could have entered the trade right here with a relatively low risk entry. I don't understand why it wouldn't be showing it. It's just not popping up. Let's see. Indices are moving up. All right, so we found our support off of the trend line here, which is where all the indicators are. So you can see again, just by the math of where the indicators are showing up in these key spots for support, this gives me a lot of confidence in watching and using these indicators. But this is a very challenging area up here for this particular move. You can see how tight and squeezed together everything is getting up here. So this key level, put one there. There's our break and hold above. I don't have a translator for that. I'm sorry. Mark says I'm in a 12-step recovery program for obsessive day traders. I'm like, sure you are. 12 steps away from the computer maybe, or a tablet. Yes, Tessa, it is consolidating up here. I tried to add letters to the question. Oh boy. I don't know, man. Hopefully you can get it to come through. Appreciate all the support over there. 27K in likes. We're about 3K away from being able to have the stream pushed out to the For You page. It'd be super nice to see that. Yeah, I can see you. Yep, I can see your text. There's nothing wrong with your account. You can talk in the live Zoom too if you were in there. All right, here we go. There's our move. Oh, where's my L2? Darn it. Here we go. 69.20 to the upside. We've got 158 contracts at 69.20. So 69.20, which is right where this blue line is, 69.1975 is the support or the resistance area that I was looking at. You could do 20 just for nice round numbers. Lock that in. That's the level we need to break and hold above. So once again, here's our last rejection that got us down here in the first place. And here's our last support bounce. So this level is going to be very important. And psychologically speaking, at 69.20 is also adds to the importance. We got a couple of nice levels coming up here at 69.23 and 69.24. Our spread right now, our spread is one tick. Nice. Nice and tight. Hey, Miranda. Yep, break and hold, Mark says. Break and the hold. All right, Mark, have a good one. And right back into the zone. Here we come. All right, so down goes Frazier. Don't really have any significant support showing up on the L2. There's 69.1275. But where am I looking for this to find support? If it's not going to be at the 9, then we're likely going to come down again and check in on this trend line, which is why I left it here. Because this could be our third pullback to this trend and maybe the final push we need to break and hold 69.20. Message showed up when I hit the chat filter and shows all messages. Yeah, I can see them. Looking at Coach's account anyway. Okay, well, Everything's turned on. Yeah, I know. I don't know why either. Yeah, Jerry, I don't know. You could, not really sure what's going on there. I do have to wrap up a little bit early today. I'm going to be heading out here at 3:30. I have an appointment I need to get to, so we're going to watch the rest of this move here, and then we're going to wrap up. Okay. Oh, it was a setting on your end. Okay. All right. We are steadily moving up here, and I've got about a couple minutes left here. Crying out loud. James, are you in here? Okay. All right. Well, there's our break. We've got a lot of good levels showing up here now as we're moving up. So we've got moving quick to 23, 923, 922 and a half. Okay. 924s would be great. Get a little bit of space before we pull back and retest that 920. Remember, we're breaking a key level here, so we're a break and then a retest of that key level is likely warranted here. So let's keep an eye on it. Do I have any anticipated PT for SPY SPX? Not really, no. I think we're on the recovery bounce now. We've been down pretty much all day long. How much of the recovery is going to happen, I'm not sure, but we're on MES, so that's virtually the same thing. SPY. Moving in much the same way. Okay, so now we've got a large area of support, 69.21, 500 contracts at ES, 69.21. So that is going to act like support. If, as long as that holds and doesn't break down, this trade will quite literally stop at 69.21. If those if those get sold off or get pulled, then you'll see the price flush right through it because there's nothing there holding price action up. So to see that level show up with that kind of strength, that tells me that they want to keep the price moving in the upward direction. Okay. And there we go, right? So the contracts at 921 were actually increasing there for a bit. Still a potential for a pullback, pretty sharpish pullback as we're just eking through all of this consolidation that we had over here. Lots of sellers wicks. So we need some volume and strength to be able to break up through that. So here's our pullback. You can see 921 stayed here at the bottom of the L2. That's important. Okay, the lower this sits on the L2, the better. As a matter of fact, when 21 disappears, that's even better. $69.32.25. Like to be a really nice level there. Again, that's where we have our last support bounce. Right here. And 2 rejections off of that. The actual rejection and then the retest and pull. And amongst that, you're going to run into pressure right here as well. All right, let's see if we can get one last push up here. All right, 69.26, 69.25. 69.25 is the next goal, and there, just above that is the line that I was drawn. So if I were to refine that for a break and hold, 69.25 flat is where that those limit orders are sitting. So you can see how many there are there. There's 500 of them there. That's a lot. So this could be either they pull them or they start selling off, and they either sold them or pulled it. It kind of looks like they pulled them. Because now we got 926 showing up with 179 contracts. There we go. 500 contracts are not in the way anymore, and off we go. There's your push. You are welcome. All right, everyone, it's time for me to wrap up. Thanks for joining me again. My name is Doug. Any memberships that you would like to partake in, use my name as the discount code, DOUG. If you're a Tradeify or a prop firm trader, use code ADT to check out for a massive discount on your prop account and or resets. If you have any questions and you're a free member to ADT, all you need to do is pop into the Traders Lounge and say, hey, I've got a question. How do I do what I need to do? And we've got moderators waiting and standing by to get you in a ticket and help you out at any time you are available. So once again, thanks for joining us, and we'll see you next time.